right, what's up, everyone? Welcome back to the NAV Lab. Today we have our guest, Brian Weinberg. Brian is one of our lending partners. We've worked together for a very long time. I think we've did upwards of 40 transactions together. He is the branch manager at Allied Mortgage Group in Boulder.
Yep.
And kind of a new venture, which I'm sure we'll get into.
Yeah.
But yeah, Brian, why don't you introduce yourself? And
Good to be here, Dr. Pollard, the doctor of real estate. So I started, I'm from Kansas City originally.
Cool.
And I came out here a lot as a kid, skiing. My parents went to CU, so I kind of had a love for Colorado growing up, and kind of always knew I was going to be here. Ended up here in about 2001. I went to school elsewhere, was kind of looking at coming out here, but I played soccer in college and got recruited somewhere else. So as soon as I was done with all that, straight out here, didn't really know anybody. And so it took me a minute to kind of get into mortgage, but it's been about 15 years at this point. I was in finance before that. And I kind of graduated, school with that kind of, finance and management. But I got into banking. I got into retail banking, like a lot of us start. It kind of turns out in. There's kind of a lot of barriers of entry to get into lending. There's just not a lot of training programs, and so I started working in a bank. Soon was managing. And I kind of saw that there was. I enjoyed it. But I also saw that all my kind of freedoms were taken away, managing the branch, and I wasn't doing a lot of sales, which is what kind of that world is. And so I was able to help my clients that I'd built through the bank and go into the mortgage side of things. And so it afforded me the opportunity to really have freedom. I was having children, kind of make my own schedule, and then also really had an opportunity from a monetary standpoint. And it was great. And kind of got recruited out of that into like the private or the smaller brokerages. So I started working in Boulder County for probably the top mortgage group at that time. And then from there it was just kind of a wild story as far as different paths that we took, and partnerships, and where I am now.
Cool.
Yeah.
Cool. So you call me Dr. Pollard. My wife literally said something like 2 days ago. She was out of nowhere. I said something like, I'm a doctor. And she was like, he's got to stop calling you that. I'm like, what are you talking about? He's like, every time Brian calls you, he calls you Dr. Pollard.
Yeah.
And,
it's good. It's always good for a laugh,
Yeah. Doctor of real estate.
Yeah. Doctor of real estate.
I think I was telling her, after like 10,000 hours, you're a professional, right? Or
That's right.
You're an expert. So
yeah.
On my way to becoming a doctor.
Make a diploma up, you'll be fine.
Honorary. Cool. And then, so from Kansas City,
Yes.
I know you were a huge help when I was there. So my wife is from
That's
there
right.
as well.
Yeah.
Her parents are vegetarians. So
Yeah.
when I went there, I was like,
It's
hey,
unique thing in Kansas City.
Yeah. I want to get some barbecue. The funny thing was, they did eat barbecue with me while I was there. So maybe they
beans and
cheat every now and then.
Yeah. They ate. Okay.
Yeah, so they had some barbecue for sure.
Interesting.
And I remember we went to like Grant's,
Gates.
Gates. That's what it was.
Yep.
Gates, and we still have Gates barbecue at our barbecue sauce at our house.
Got
and we
many bottles. Yeah.
put it on everything. Her parents get here on Saturday, and they're bringing us some more. So
oh, nice.
Pretty excited for that. That's the one where they're rude to you.
Oh yeah.
Is that what it is?
Oh yeah.
Okay.
I never tell anybody too, so when they get there, you know what's coming, and it's fun to take somebody there that you just kind of want to haze a little bit. But yeah, they get pretty raw and very bossy.
Yeah.
And pick up a tray and to stay or go, and yeah, they kind of shout at you.
Yeah. I actually didn't order. I like told her my order and then just kind of watched it all go down. It was pretty funny. Cool. And then Oklahoma Joe's or Kansas City Joe's now?
It's just maybe it was like Joe's for a little bit.
Okay.
But yeah, as a kid, I went there. It was it's in a gas station.
Yep.
And there was a frisbee golf course that was really close, so that was kind of on our circuit, in high school. And when you didn't have any money, you go play free frisbee golf, and then you go get a barbecue meal.
Cool.
But it's a unique place for sure.
Do you still play disc golf?
I don't. I have my bag. My kids are kind of getting to the age where they want to start,
Cool.
but yeah, it's definitely something I want to do.
I have my bag of discs in my car right now.
We got to do that
I
sometime.
haven't played in a long time, but I always want, like, I'm ready.
Yeah,
Yeah.
me too. Yeah.
Cool. We should definitely go play. Anyway, so back to kind of real estate lending stuff.
Yeah.
So we've worked together for a long time now. We started out, you helped Luis.
Yep.
So how did you meet kind of the NAV
Yeah,
team?
yeah. So actually, it was Andy Scott.
Andy, cool.
Yeah, Andy, and so Andy and I did a deal together. Kind of randomly. We ended up having a client that had a really tough transaction, and she was kind of up based in Boulder, Crispin Porter, and it was a dear friend of Andy's. So I kind of got to know him through the transaction. There was another agent who was involved, and it kind of went sideways, and so we just kind of bonded, and we've got a lot in common. We've always hit it off, and this was 5 years ago,
Yeah.
Ish, maybe even more, and so you guys were just kind of getting going and really starting, and so he introduced me to Matt, and then I met with you and eventually Corey, but yeah, we saw kind of opportunities in each other, and I think but yeah, Andy is how I met you guys.
Cool. I always thought it was Luis for some reason.
Yeah.
Because Luis at one
Love
point,
Luis too.
He was basically like, I work with Brian and that's it.
Yeah.
And like that was like, I mean, I'm pretty sure it's kind of still that way.
Yeah. I mean, those guys are awesome, and certainly love that he's on his adventure. It's pretty cool what he's doing.
Yeah. So Luis was on one of the first episodes of the podcast, and right before he left, so he's down. I talked to him a couple of days ago. He's in Costa Rica.
Yep.
And having a good time, and his wife is learning Spanish.
Right? Yeah. Andy was telling me all about it the other day.
Yeah,
it's great.
He's loving it. He's getting to do some jiu-jitsu down there too,
is he
which
really?
He's really into now as well.
Then did you get him into that?
No,
Okay.
I don't know. He didn't join my gym, but
Yeah.
I was talking to him about it a lot.
Okay.
And then like a couple weeks later, he's like, "Yeah, I'm going to class," and like he goes to a different gym. I don't really know how he ended up there or whatever, but yeah, I keep trying to get him to come in to our gym and like check it out.
Doesn't want to spar with you, I think. Maybe something's going on there.
Yeah, maybe maybe because I started before him, so maybe
Right.
he's just getting his skills up, and then
Yeah.
he's gonna choke me out. You never know. But yeah, so through Andy, and then in the beginning we had our Zillow relationship,
Yep.
right? So
Yep.
you were helping us with marketing and
Yep.
things like that, and I think we had like 5 lending partners, and then I don't know how I did my first deal with you. I honestly can't remember, but ever since then, you've been my go-to. And even I think I've bought 2 houses with you,
Yep.
and then refinanced twice with you.
Yeah.
And that was with Planet Home Lending.
Yes.
Right. And how long were you there?
So our Planet venture was about 5 years, I think.
Okay.
Yeah. So we recently have transitioned to a new platform. Yeah.
Okay. And when you say we,
Yeah. So
business partners.
Yeah. So I guess it's about 11 years ago. We all kind of knew each other at a basically Cherry Creek Mortgage, but there was an office in Boulder. That's kind of what connects us all, which is a local lending office that most people know in our market, based out of Denver. Kind of small to medium size, for the country, but really good shop. And we left there for various reasons, and it was kind of this big deal. There was 5 of us that all left on the same day, so it went down in infamy. But it was needed. We saw some opportunity, and so we started, kind of moving through the process of really learning the business, as managers. So we had a partnership then. Now it's a partnership of 4 of us, and there's been some changes along the way, over the 10, 11 years. But we were at New American Funding to begin. So we were there about, it was probably about 4 years, 5 years, maybe five, and then. We've been here about 2 months.
2 months.
So part of what we do as a partnership, and part of my job or any of my partners is to continually be trying to improve our situation for really our employees, ourselves, as a management group, but really our clients, and our partners, to make sure that we're giving you guys the best opportunities and best pricing, best products, that simple stuff. But this is an incredibly interesting last 5 years of mortgage. We've never seen anything like it, and I've been doing it 15 years, and we went through the downturn in 2008, 2009. So that was very interesting, but this is like super unique. So our business, as got to the highest levels as far as transactions during the pandemic. So roughly 2.5 years, and it's come to a crashing halt at the end of 2022, and interest rates have risen drastically.
Mm-hmm.
Well, really all of 22 is really kind of what happened, but it's been an interesting to talk to executive teams across the country from a lending perspective. So part of our job is to always keep our options open for our team, and so we spent honestly about 1.5 years before we made this move of research and traveling across the country and meeting with lending companies or having them out, and just constant conversations with colleagues. And so that's part of what we do, is just like you guys do as a management group. And so this all took a lot of work, but it happened pretty recently, and we're super excited to be here at our platform at Allied. Yeah. And it's gone really, really great. Yeah.
Cool.
Yeah.
I found myself almost say plan it like 10 times talking to agents.
Yeah.
Wrote it in an email once and had to be like backspace just because I'm like so used to it.
Yeah.
Cool. So in terms of like getting business, I'm assuming a large percentage of your business comes from agent partners.
Yeah.
Or,
yeah.
Do you know, like, are you like 50% like your past clients referral base, or like, do you know how your business kind of runs?
Yeah. I think that, not down to the granule, but like, we definitely track it. And, I'd certainly say at some point, you kind of tip towards your sphere, when you do enough business, 15 years, it's a lot of clients. And so we really try to work on retaining our people. And we've always worked for mortgage companies that service their own paper. So that keeps everybody kind of in-house, and, gives us the ability to give them customer service after the fact. So that's, just a huge piece for us, and gives transparency on what's going on with the mortgage. And so that's been a great tool as well. But, it's definitely, relationships that I've built over the last 15 years, whether it be an attorney, whether it be a CPA, whether it be mostly real estate agents, is, kind of where lenders would, get their partnership business.
Yeah.
But yeah, I'd say it's probably roughly 50-50, something like that.
Cool.
Yeah.
Cool. I think about that a lot. Like, there's a really famous real estate agent. His name's Ryan Serhant. You probably heard of him. $1 Million Listing.
Okay.
He's probably got the largest social media following, and he talks about he didn't really build a business. He built a brand, right? I think about what he does on like the day to day, and I can relate it to how I feel you kind of run your business too.
Mm-hmm.
Like, you're very much like the face of your business.
Right.
When I have like a client that I'm referring to, you call them, you're that point of contact, right? But then you have other people doing the work behind the scenes for 100%. The most part, right?
Yeah.
And that's what he does, right? He's the brand. He generates business all day, every day. That's what he does. He's a lead generating machine.
Maker,
and then everyone else is kind of running the stuff behind the scenes.
Yeah.
And I think about that for myself too. Like,
Yeah.
how can I optimize to do that? Because right now I do every single thing.
Well, we've talked about it too, and I think I've talked about it with like Russ and some other guys of like, should I get an assistant? Making that move, and it's 5, 6, 7 years into your business, 8 years, it's like you kind of get to the point where and it's really hard to do and find the right person. And I recently found somebody who is my full-time assistant in the last 16 months or so, and she's amazing, and like it's just like such an extension. And but it's just really fun, to have somebody, kind of understand where you're coming from, understand like how your brand is, or like how you talk to people, and then kind of extend that, and then teach, her stuff, that she doesn't know and she wants to learn. But yeah, we've built our team. That's something that I think that we, kind of value, and I've always been attracted to what you guys are doing, because we value our team so much, and we really, maybe retain them, because we treat them like how they should be treated. We pay them, probably more than, market, and just, share the wealth. So like when we were in our boom times, we were giving, we're profit sharing in essence, what was going on. So, it's really important. We've seen a lot of bad behavior in the mortgage companies that we've been in, and so it's like, correct this behavior. This is toxic. We don't want to live like this, and so it's all work balance, for our group, and we're probably overstaffed, in all this, but that's super important to us.
Yeah.
Yeah.
Cool. Yeah. And you mentioned like similar to like what we do, right?
Yeah.
That's kind of, so I've been interviewing a lot of new agents, and the way I've been describing it is our like North Star that we've always been pointed towards has been like to take care of our people and to make our brokerage the best place where you can be an agent, where no one's making money off you, right? No one's making money off your hard work. But yeah, back to what you're saying too about an assistant. Like, I think about hiring one all the time, and then I'm like, well, I'm not busy enough. But then I think, well, I'd be way busier if I had an assistant. It's just this like constant battle that I go through. But
it's super hard.
It's something that's been on my mind for probably 2 years now. So we'll see. I know Russ got a virtual assistant.
Okay.
So they basically handle anything that's like not in person for him.
Yeah. Is it going well?
I don't know. I need to ask him about it. Russ is just kind of in his own world. We text a lot, but it's not really about real estate a lot of times. He'll call me if he has like a question on a contract sometimes, but I need to call him and just see how that's going.
I do love that dude.
Yeah. Yep. He's awesome. He's a funny guy. We worked together as personal trainers. That's how I met him a long time ago, and I brought him onto the team.
I didn't know that.
Which has been great for me from like a private share perspective, because he does so much business,
it's been great.
I get like the recruiting points and things like that for him. But yeah, got his family down in the Springs, and
couple kids,
crushing real estate, growing our Springs team right now as well. I think we're trying to hire like 10 agents down there.
Oh, wow. Nice.
To really grow that team.
You need to call them. Yeah, it's fun to watch, your agents like run into Landon and like see these guys grow so drastically in such a short period of time. And I think that has a lot to do, with your guys' model, which is unique, and I think that you're getting a lot of reps, with this lead gen. And so you got agents that usually take, 2 to 3 years to really like do a couple, 3, 4 deals, and you're doing, these guys are having opportunities and swings to do, 10 or more in their first year.
Yeah.
So you learn by fire, and but you see the growth like drastic,
Yep.
It's pretty great.
Landon has a pretty crazy story about when he started out. He like came in and sat down with us and was like, okay, I want to be an agent. And then 27 days later had his first closing. Yeah. So like,
I think I might have helped him with it, honestly.
Yeah, I think so.
Yeah.
He got his coursework. He studied, passed his test, got a client, had his first closing.
Yeah, that's awesome.
So fast.
And almost too fast.
Too fast. I know. He talks about that too. Is like he had no idea what was going on. Luckily, he had someone to kind of help him. We all helped him along the way.
I bet.
Cool. I was thinking too. You were talking about things kind of came to a halt with rates increasing throughout 2022. Do you think if they did a slower increase, because it was like one day rates are in the 2s, next day rates are in the 7s, is what it felt like. And it was just very abrupt. I mean, if it was a slower increase over maybe 2 years, right?
Yeah.
Would that have changed things? Would things have kept moving?
Yeah, I mean, I think certainly it would have changed things. I mean, I think it's so stagnated now. There's so much fear in the market. I mean, we'd never seen anything like that in a year period of time, a 4% interest rate change. And it was just so drastic. I mean, we saw massive daily changes during the pandemic, and interest rates moving a whole percentage, but nothing like that. And so, the Fed is doing what the Fed's going to do. And they're, a lot of people think they're nuts. And, we tend to think that oftentimes, but it's just like, a train gets rolling and it's really hard to stop it. And they're just, trying to slow down the economy. They're trying to increase, rates for Chase Bank or Wells Fargo. They're borrowing that money from the Fed. And so it's become more expensive for consumers to do anything really, you know. And so, it's certainly working. Inflation's coming down. So we talk about this with clients just, every time I talk to a client, there's so much fear for a first timer or really anybody, that you talk to, where we think it's an absolutely great time to purchase, and I'm sure you feel the same way in a lot of ways. The competition's not there, do you want to compete against 10, 15 different offers, within a couple hours versus now. I mean, obviously the inventory is a big problem across the country, but we're starting to see appreciation come back, across the country. So we're we track a lot of different metrics, and whether it be CoreLogic or different companies that are tracking all this Zillow. But 5% is kind of like 4.7, like nationally is where we're seeing appreciation year to date. Mm-hmm. So we're starting to see the market kind of grow again. Inventory is a massive problem, right? There's nothing to buy. And so, and then interest rates being higher, payments being higher. So we've got a lot of clients that are really, have a real issue either qualifying or it's a big payment now, so we talk about this, just over and over with clients, trying to make them feel comfortable. And I think the biggest question that comes up is like, should I do it now? Like if they're qualified and they should be purchasing, good credit, great income, low debt, these people shouldn't be renting, right? It's like, well, what should I wait for 6 months, until we can go ahead and get interest rates down? Well, you don't lose the opportunity to refinance, right? So that'll always be there. Then we talk about that in detail, why we think we're going to be in a refinance situation. So we go deep into that, and we can talk about that too. But it's like, we're appreciating, and our market has many factors that appreciate, right? And there's reasons for it. So those aren't likely changing. And we came out of like 2008, 2009 quicker than most, states and cities across the United States. We had our problems just like everybody else, but, we started to appreciate quicker. So, they're coming out, if you look at purchasing now and then losing, even 3% of appreciation, over the next year or 2 years, that number of appreciation is greater than the amount that they would save if they waited. If you just looked at the interest rate of a 1% difference, something like that, maybe 1.5%, it's drastically different.
Yeah.
So, it's a hard thing to talk to clients about who've never purchased a home, that don't understand how to refinance, because then that's a whole nother fear, place of like, what is a refinance? How does it work? How much is it going to cost? And there's so much misinformation out there. And there's honestly just lenders that are, desperate and haven't been in the business for 15 years, don't have relationships, and there's lending companies that are desperate. So they're doing loans at a loss, and it's super confusing to consumers. So really what our job is to spend that hour or longer, with these new first-time home buyers, or maybe it's 2 or 3 of these calls, and just make them feel comfortable with, the crazy market that they're living in. I don't envy anybody purchasing a home, especially if we don't know anything about the process right now. But that's what our job is to help them.
Yeah, for sure. And so one thing you said, now were you talking about when rates changed a percentage in one day? Were you talking about when they dropped or when they went up?
Well, they did that too. So that was pandemic, and we had like a 400 basis point move on the coupons, I think maybe 3 times, certainly 2 times.
Yeah.
So you're talking to somebody, this is again when, nobody knows if, they have to bleach their, groceries or whatnot, So it's craziness, and interest rates dropped drastically. So we're really busy as from a lending standpoint. You guys can't even go into homes, and show people properties. So these things are happening. So you're talking to a consumer, and we're at 3%, or 2.75% one day, and then the next day, because the market moved so drastically, because there were so many crazy things going on, that we're at 3%, or even higher, right? And so you're talking to the client and trying to, navigate that with them as to what happened, why it happened, our rate's going to come back down. Yeah.
Yeah. So at that time, I had 5 people under contract. I'm pretty sure some of them were with you at the same time, and they all terminated. Yeah. Every single one of them were like, we're terminating.
This is like February, March 2020.
2020.
Yeah.
Yep.
Yep.
And then
but you weren't alone.
Like a month later, though, they were all 5 back under contract.
Oh, that's right.
Yeah, they like saw that the world wasn't actually going to end, and then we're right back out there shopping. So I don't know if that was during the exact time that rates were like doing this crazy stuff.
No, this was a little bit later.
Yeah.
But yeah, I mean, it was crazy. Yeah, it definitely wasn't work balance for me, and my wife wasn't super excited about this couple years, but it was a big deal. It helped us do a lot of things with our group, and their families. And
I know we spent a lot of time on the phone.
Yes, long conversations.
I mean, that was April like first week of April, everyone terminated.
Yeah.
I was freaking out. I'm
Yeah.
like, okay, I don't have any income. Typically after the winter,
Yeah.
I just got back from Japan snowboarding. I don't have any money.
I mean, it was buying season.
Yeah, I was freaking out. And then I had the best month of my life. I had 11 closings in 1 month
That's
right
right.
after that, during the pandemic.
Yeah.
Like, so and that was really like off to the races
Yep.
for almost 2 years solid. I
Yep.
mean, I know we did a ton of business during that time.
Yeah, and it's like, you look at the Fed and like housing's going to lead us out of this. So whether we go into recession, or the inflation comes down. So these are the things that are going to like drive interest rates down naturally and traditionally do. So inflation comes down, bond market's going to love it. Interest rates are going to get lower. The Fed is like, watching this like a hawk on a monthly basis. And then, recession, like how deep are we going to go into this globally, domestically? We're probably in some sort of a recession already, but traditionally, if you're in a recession, interest rates are going to get lower. The Federal Reserve is going to reverse their monetary policy. They're going to do the opposite of what they're doing now. They have other levers for sure, but they're going to, try to manipulate the market to where housing is leading us out. Interest rates are lower, and so that's what was going on then. Is that we were trying to stimulate the economy, the other way, and really it was an opportune time to purchase, right? Or once we all figured out we weren't going to die, So it was a crazy time.
Yeah. So I purchased a home during that time. You were the lender on it.
Yeah.
And my home value went up about $400,000 over the next year.
Was that a year?
Yeah.
Wow.
Yep.
That's incredible.
And then it went down a little bit,
Yep.
and now I think it's back up pretty close. And there's some good comps in my neighborhood. I got lucky. There's like my home was scraped for the most part, and then a huge addition built on it in 2018. So the whole house feels like it's 2018, and then some, like a whole new construction just went up in my neighborhood that all sold between 1.5 and 2. So that helped my home value a ton.
Amazing.
So I got kind of lucky with that. I think not just the market going crazy.
So it's not necessarily scrapes that are happening. It's just like this new.
There were 3 lots that were an acre a piece, right? So they tore down all 3 houses. On one of them, they built 8 new builds that are all 5,000 square foot, brand new homes. We actually did some videos there recently.
Nice.
And then the other 2 lots have like 1 home each, and they're $3 million houses that are like some of the coolest houses I've ever seen. They're in Wheat Ridge. Want to go check them out? Let me know. But most of them are still on the market. A few of them have sold already, and that helped my home value a lot. But
Nice.
I mean, through the end of all this, so we own 4 properties, right? And almost all of them have doubled in value, besides the most recent one. And if it doubles, God, I don't know what I'm going to do. I'm going to have to sell it and buy a multi-family or something.
Yeah, I mean, it's a great story that we hear all the time, in our marketplace, and really across the country. Like, we have some of the highest equity levels that we've ever seen across the United States in homes. I mean, we're starting to see things happen the other way because it's really tough right now.
Yeah.
So we're starting to see savings depleted and credit go up and things like that. But the equity's there, so people can tap into it. You still have to qualify to tap into your equity, or you sell your property, which oftentimes people don't want to do now because they've got these incredibly low interest rates. So they're a bit handcuffed. So it's a complicated market that's really grinding everything to a halt. It's all these things combined.
Yep, and that was one thing I want to talk to you about a little bit is we have, so I think we have 5,500 listings on the market in Denver Metro right now, and we need about 35 to 40,000 to have a balanced market, right? And then more than that to have a buyer's market. So we have this extreme seller's market still, but we have higher interest rates. So the thing that's causing the market to freeze too is sellers don't want to sell because I have a 2.5% interest rate on my properties. Like, I don't want to get out of that to get into a 7% rate right now, or wherever rates are at. Maybe even 7.5%. So I don't want to sell. So that's where most sellers are, and it's just freezing everything. And then you have like we have a buyer we're working with around 500K right now, and that's the cheapest home you can find in Denver
Really
for
tough.
the most part for single family. So we've been battling 10, 12 offers on almost every property. I think we've offered on 8 or 9. We have an offer out right now.
That's right.
8 or 9 homes. And it's just so tough. And then I have a listing that's we're at 764. We started at 794. It's been on the market for 80 days. We've had 44 showings and not one single call, not one single offer.
There's some weird stuff going on in listings too, right? And price points are different. I'm hearing kind of even the lower price points, there's some weird stuff still going. You would think there wouldn't be, but like no showings, and it's bizarre.
Yep. Yeah. So it's interesting in the people ask me about the market every day, right? So I have to give them my opinion on it. I can look at the data, and I can look at objectively what I'm experiencing out there, and it's so interesting. There's not a good answer in my opinion right now, and like in the 500K range, there's a lot of like 2-bed houses, right? And they're been on the market for 30 days, 40 days. Long time for our market, right?
Very long,
One house hits the market with 3 beds, 12 offers, right? And this is basically 550 and under. 550 to say 800K, weird market. Don't know any rhyme or reason why things are sitting, why things are going quickly. I mean, location, if you're in Cherry Creek School District, doesn't matter your price range, you're going super fast.
And that's where most of families would be like in our market,
Yep. And then over 800, it's pretty hot. There's not many listings at all, and it's nice houses. These buyers have bought a home before.
That's the difference.
They have that understanding, and I think before they enter the market, they know exactly like first-time home buyers are going through the shock of payment and things that they have to do to compete and waive appraisal, cover appraisal gap, waive inspection.
But maybe they're competing less even though. I think like comparatively to our normal market when it's competitive. Like there are some benefits to it.
Well, it's definitely different than it was in April or March. I mean, March, April this year was crazy like every year at 7.5% interest. But we just don't have the listings. And so even if we don't have that many buyers, we still just don't have the listings.
It's, and again, it's like there's nowhere to go for these people that are selling. So that's the other piece. And like I think we've always talked about this as a group, and we kind of manage as like a collective with, and I think you guys do too, but we take everybody's opinion, and we've got a lot of loan officers as well, or people that have been in the business, probably our average tenure is like 12 to 15 years. So people that have been around through a lot of this stuff, and kind of when we saw this, I guess this was kind of the beginning of the year, we were kind of creeping down to like 5.875, and there was just this like floodgate that opened. So I think that if we can get, eventually we'll see interest rates come down, so there's going to be kind of a place where
things are going to get crazy.
It's going to get crazy, and people are going to list their houses, and so it will happen. And I think that's another thing to like really, we always are communicating with our first-time home buyers or clients that just haven't been through this. They just haven't been through it. So it comes in cycles. Interest rates will go up, they'll come down. Prices will go up, they'll go down. Mostly up out here. But and that's a shock for a lot of people, I think. But we still haven't seen really big depreciation out here.
Yeah. I'm starting to get buyers that bought in the past 5 years to again. And they understand, it's been a battle since 2016, maybe longer. And it might always be a battle in Denver, honestly. Like it's an awesome place. People want to live here. And there's always going to, I think with the generations that are buying houses right now too, it's a lot of people that want to buy. It's hard to get a rental right now, and it's expensive to rent, and people are realizing like, hey, let's go buy a place, and then we can become a landlord one day or whatever.
I'm just seeing a lot of people like come to that decision, that like, look, we're going to be landlords now. We never wanted to do this, but we're doing a lot of that conversation now, that people are retaining properties and how that works from a lending perspective. And so, which is, kind of my sweet spot, which is great to talk to clients about, because that's what, we've done. And we've helped clients with that, ad nauseum. And you kind of nailed it. Like having that property appreciate $400,000, that's what can happen to them, in our market over time. So, we're seeing a lot of that happen. And, it's exciting because they could, they're basically building wealth, and you get to be a part of that.
Yep.
Yeah.
So I wanted to ask, so is there any advice you give? So first time home buyer, they call you up, hey, we're thinking about buying a property.
Yep.
We spoke with an agent. We haven't seen any homes. No idea what we qualify for.
Right.
Advice you give right off the bat. I know like filling out your application is kind of step one a lot of times.
Yeah. Yeah. No, I mean, I really just try to like transparently talk to clients about, what they want to know about, and generally a lot of stuff that we just spoke about is what I'm talking to clients about. And, I think that, again, there's just so much deception and like, bad information. There's good information out there, but how do they know that that's good information? So I just try to take an educational, try to advise clients, and that usually goes a long way. They don't sign, there's nothing sticky to a lender, right? So we don't sign buyer agency agreements or anything like that. They can work with whoever they want to. And, over the 15 years I've been doing this, I've seen it become less personal and about that with clients, more online based, and there's really just, less loyalty to a conversation. But it is what it is, and the industry's changed pretty drastically. But what we still do is we take that advisory role and just try to educate them through really wherever they are. I mean, if they've purchased 16 places in their life and they have questions about investments or cap rates or whatever it is, advice on real estate, anything like that, I'm going to help them with that. But if it's a first-time home buyer, there's just a lot to talk about. There's a lot of products, and there's stuff that hasn't been in the market for, a couple decades. All these buy-down programs, which we talk about ad nauseum. We don't have to talk about that. But yeah, I mean, I think it's just making them. I call it my Mortgage 101 call is what I do with clients, and basically, help them out up front, get them pre-approved, do this basic stuff, and then, spend, usually about an hour, a half an hour to an hour with these clients, and just, really walk them through environment, why rates are doing what they're doing, where we think potentially they would go. We don't really know. Nobody really knows. But, it's just a matter of like, hey, these are your options, and I just feel like there's a lot of lenders that, maybe aren't doing that right now. I mean, I think a lot are, but, there's a lot to talk about, and it takes a lot of time, and it's just really important, I think, right now.
Yeah.
Yeah.
So I mean, from my perspective,
Yeah.
right, I would say that's the biggest thing that kind of sets you apart, right?
Okay.
Is that Mortgage 101 conversation. And when I'm talking with someone, maybe it's on a showing or the first time I meet them,
Yeah.
and I know they don't know anything, which
Yeah.
is most people.
Yeah.
I think that's why you jump to my mind most of the time,
Yeah.
is because you take the time to
Yeah.
walk them through and to coach them. And that's very much how I've always run my business.
Right, totally.
I say the same thing every time. Hey, we're never taught how to buy a house or do our taxes. I'm not going to do your taxes, but I'll help you I'll teach you to buy a house,
Yep,
right?
yep.
And then I coach them, right, on like, hey, first step a lot of times is to speak to a lender, right? We need to know what you can qualify for, if you can qualify,
Yep.
how much, what your payment's going to be, right? I explain how you're going to look at their debt to income ratio. But for the most part, I try to not get into that loan conversation because I can trust that you're going to do that,
Yeah.
and you're going to do it much better than me, right?
Yeah.
But I know we've spent hours on the phone, and I'll ask you those kind of
Yep.
dumb questions a lot of times. Maybe I do want to know, maybe I want to hear what you say, and I'm going to use that.
It's a good way to get yourself in trouble, right?
Yeah, for sure.
Yeah, and I've had a lot of agents that probably get way too far into the lending, and sometimes it causes issues. But I love that, like, an agent who understands it and can kind of speak the language, and and I know a lot about real estate too, so it's good to kind of have that just.
And I tell clients that
Yeah.
you know a lot about real estate,
Yeah.
and not only are you going to help them on the loan side, you're
Yeah.
going to be able to advise them a little. And I think that's why we've always worked well together, is
Yeah.
because like I trust that whatever you tell them is like getting them closer to buying a house and to their goals, right?
Yeah.
And then we talk, and we're able to always like come
Yeah.
together with a plan to get this person into a home.
Yeah, and I think it really, what resonates with clients is what it really boils down to are, a lot of times they'll come in and they'll go, what can we get approved for? And they're kind of, guns blazing. But then you kind of go backwards, you kind of reverse it to what they're comfortable with, like coming out of pocket. Really, and like really what they really want to be spending on a monthly basis, which sometimes doesn't line up with, you know, the market and price. And so I see that a lot. You know, that's sometimes a lot of lenders are just kind of giving them like, hey, you can go for the moon, you can have a $5,000 payment. And so I just, you know, those are the kind of little things that in those conversations that I think, you know, clients appreciate, and that, you know, builds trust. And but it's really what you should be doing anyway.
Yeah.
Yeah.
So I wouldn't say that's the main thing I like about your business, right? But it's huge, and it makes it to where when it is time for the buyer to speak to a lender, like you're top of mind because I know that you take the time to do that. Now, there's all the other stuff where like I can ask you for a pre-approval letter at 8:30 last night, you know, when we needed it. It's like, hey, our offers are due today. Like, can we get this? You text me like, I don't know, you were at dinner or whatever, and you're like, hey, I'll get it to you. You know, 8:30, perfect. I talked with the clients at 8:45. We got the offer in 9 o'clock, and now we're
part of
negotiating.
The base. Just kind of gotten used to it, but. You know, I mean, there's requirements with our business on the weekends, and that's again like, you know, with with Karen, who's my assistant, who's amazing, who you know, can help me with things like that when I'm not available, and it gives me the ability to take trips and, you know, kind of telling you.
Yeah, I think about that all the time. So, I mean, you travel a lot, right? I mean,
we do, yeah.
And I'm to the point in my life where we're talking about having kids and things like that. So, has things changed a lot with kids tagging along? Are you taking different trips now?
Yeah, I mean, you know, we waited. I guess it was 28 when I got married, and then, you know, we didn't have kids until like kind of middle 30s. But so we traveled a lot. We did a lot of trips that you're doing, you know, all over the world, and you know, Thailand's, and, you know, lots of Costa Rica stuff. But we actually take our kids on those trips a lot too. Maybe not exotic as, you know, Thailand, but, you know, we were just in Costa Rica with our kids, and Colorado kids hated the bugs. I mean, it's just these kids.
Well, there's
you know?
bugs here now. It's so weird. Yeah,
that's true. But like, you know, not like that. So this house that we were in had windows that all had like a little bit of a way in. And so, you know, there were ants and stuff, and it's really funny. But yeah, we like to definitely take our kids, and you know, travel is such a big release and a great way to, you know, show the kids something else, you know, besides Denver, which is, you know, maybe not the most diverse place in the world. And so they get to see lots of stuff that way. Yeah.
Cool.
Yeah.
I'm excited for it. I mean, we're going to start trying for kids in about a year, and we've got a lot of trips planned to get in before that all happens. But I'm excited to you know, do it with kids at some point.
Yeah. You still could get your trips, you know.
Yeah.
Your one-offs or whatever.
Yeah. So my wife's already said I can continue to go to Japan every year.
You gotta do that trip.
We'll see. I'm gonna hold her to it at least one time. But yeah, we so.
Maybe not 3 weeks or whatever.
Yeah, a month. Yeah. So I go with TJ every year, and you know TJ. And we have kind of a third best friend, and he just had his first child. Okay. And his son, Lewis, I call him Lou, is coming up on his 1 year birthday. So he's gonna come with us this year for the first time.
Oh, is he really?
And he like we have matching tattoos. We're like all really close.
Yeah.
So we'll see. You know, if it works out well for him.
The 1-year-old's not coming.
The 1-year-old's not coming. Okay. Just the guys. So kind of guys trip just for snowboarding.
That's awesome. Where are you gonna
go? To Japan again.
Okay.
Yeah. Yep.
Yeah.
So same place we typically go, but he's never got to go. And he's actually a loan officer. So
that's right.
I like to think that I got him into real estate. Became an agent for a couple years. He lives in the Outer Banks of North Carolina.
That's right.
And then became a loan officer there. And I think he did 50 transactions his first year.
Oh, wow.
So he does kind of like Josh does here, where he works at a Keller Williams owns. It's like a JV with them. Yeah. So he gets fed business that way. But he's loving it. And
it's great.
He's learning I think from the loan officer side and from the real estate side, like being able to travel is a little bit different. Mm-hmm. I know your business partner helps with your business a lot when you leave town, which has been great and seamless for me, from my perspective, and from the client's perspective. But for an agent, it's cool. You know, I can have people show houses for me and things like that. But like this last trip to Japan, had 2 closings while I was gone, and I
Mm-hmm.
got 2 people under contract while I was gone, and I didn't tell one person that I was gone.
Yeah.
Like in terms of clients, I didn't
Yeah.
tell anyone.
Didn't have an out of office or anything.
I was available
Yeah.
over the phone, and then I had people show for me.
I mean, you could do that nowadays, and I've definitely worked on these trips for sure. And sometimes it's a bad idea.
Yeah, no,
For,
I agree.
for your trip, and so I tend to have done that enough to where I try not to, but it seems like it always gets really busy when you leave.
Yeah.
Like it's going to happen, and but yeah, having a business partner or somebody that you trust to kind of have an extension of your services, it's really important.
Yeah. So on my honeymoon, so Japan is tough because when everything's happening here, I'm asleep there.
Right.
So I have to put my phone on loud, and like I'm just all night barely sleeping, just looking at what's
What are you
coming
doing to
in.
yourself?
I know. Yeah. So we went on our honeymoon in Belize, right?
Yep.
Same time zone,
Mm-hmm.
and I got 2 people under contract on my honeymoon. So, my wife is awesome. She's super cool. Will let me do that. If you're getting into real estate,
Yeah,
definitely have
Kenzie.
a partner that supports you. But it was a 1.5 and a 1.2.
Yeah.
So
I
I
paid for your honeymoon.
paid for my
Yeah.
honeymoon, a couple times over
Yep.
with those deals.
Yep.
And I worked
Yeah.
3 hours
Yeah,
the whole
yeah.
time,
Yeah.
all in all, right? Just
Right.
short calls and then writing 2 contracts.
Yep.
Had someone show for me, while I was gone, and
It's building systems, and
Yep.
we can do our job anywhere. I mean, yours is a little bit tougher because you have to show houses, but yeah, I mean, it's kind of it's definitely a dream.
I always think about if I got into lending, I probably wouldn't live where I work.
Yeah.
I'd live like up in the mountains or something.
Yeah.
Um,
Well, yeah, I mean, that's the thing about lending is the market's constricted so much that there's less deals out there because rates are higher, and so companies are going out of business, and companies are doing loans at a loss. But how do you kind of offset that revenue? And one of the ways is by doing business outside your state, right? And so getting licensed all over the country. I mean, so this is the same kind of concept, right? Of doing business in North Carolina or Texas or California. And so, yeah, I mean, that's kind of what the idea would be. You don't have to be there to do business there.
yeah.
Yeah.
Cool. I don't think I'm ever going to get into lending, but
Don't do it.
Don't do it.
Yeah.
Awesome. Well, thank you so much for coming on and having a conversation. A lot of good insights there,
for having me.
and thanks for the partnership over the years.
Yeah, you too.
Yeah, cool. If anybody wants to contact you, what's a good way to get in touch with you?
Yeah, I mean, you can reach me at my email address, bweinberg@alliedmg.com.
Cool.
Phone number 303-916-6982.
Cool. And we'll put all of his contact info in the description below. If you like the video, if you like the podcast, hit that like button, hit that subscribe button. We'll see you in the next video soon. Peace.